Senator Reid from Rhode Island is recognized.
Thank you very much, Mr. Chairman, and thank you to the panel. Ms. Gittleman, I've introduced S2508, the Veterans and Consumer Fair Credit Act, with Chairman Brown and several members of the committee. And this legislation would establish a nationwide interest rate cap of 36%, with the goal of eliminating predatory loans from our consumer credit markets. We already have something similar to this with the Military Lending Act, where we're protecting our servicemen and women with this same limit. Can you give us some examples of the new emerging products that appear to be consumer friendly, but in practice are predatory and really exceed 36%?
Thank you, Senator Reid, for this question and for your advocacy on the Veterans and Consumers Fair Credit Act, and Chairman Brown as well. Finance products that use the TIP model are an example of this. Pricing can look very affordable on the outset, but can reach as high as traditional payday loans. Other loans, that we haven't necessarily talked about today, but I addressed in my written testimony, that are offered online or through a smartphone application, and those that use, especially those that use the rent-a-bank scheme, to peddle high-interest loans, even in states where those rates are illegal.
You mentioned the rent-a-bank arrangements. Can you do how they avoid the state usury limits?
Sure. So banks are largely exempt from state interest rate caps, and high-cost lenders have used this exemption to launder their loans through banks in order to evade state interest rate laws. This is not a true bank partnership like Ranking Member Toomey was speaking about. The high-cost lender has the predominant economic interest in the loan. They're doing the majority of the underwriting, reaping the majority of the benefit, taking on the majority of the risk. And they either name the bank at the very end of the agreement, or they pass the loan through the bank in order to evade that state interest rate cap. And last year, Congress, in a bipartisan rebuke, rebuked these partnerships, these rent-a-bank schemes. But the Veterans and Consumers Fair Credit Act would protect consumers from these high-interest loans that are evading state interest rate caps.
Thank you. There's another product that's becoming more prominent. That's the buy now, pay later. And these loans allow consumers to split payments for products like electronics and clothing into 4 equal installments, typically, that are due every 2 weeks. And they've been very, very popular in the pandemic. In fact, according to the Mercator Advisory Group, $55 billion in buy now, pay later credit was extended in the last year in the United States, and they're projecting an expansion more than $100 billion by 2024. Which consumer protections law do apply to buy now, pay later loans, and which do not?
We would argue that most consumer protection laws should apply to buy now, pay later. As it's being structured more and more like open-end credit, TILA should apply. With finance charges and mandatory arbitration agreements, the Military Lending Act should apply. As it's commonly used by consumers of color, ECOA, the Equal Credit Opportunity Act should apply. Since many products require or include authorization for payments to be automatically deducted, the Electronic Funds Transfer Act should apply. For products that allow consumers to consent to debt collection in the initial terms and agreements, the Fair Debt Collection Practices Act should apply. And finally, federal regulators should supervise buy now, pay later providers and ensure that they're not engaging in unfair, deceptive, or abusive acts and practices or unlawful discrimination.
It's also my understanding that the BNPL lenders do not report to the credit bureaus in any standardized fashion, which complicates evaluating the credit of an individual for other types of loans. Is that accurate?
So we are in the beginning processes of having that buy now, pay later data incorporated into credit reports. It is not done in a standardized manner. Each of the credit reporting bureaus have their own format of incorporating and using that data. And it might both not only have underwriting consequences, but also credit reporting and credit scoring consequences as well. FICO scores of credit reports that have incorporated said data have lowered slightly, and it just illustrates that at best, the current credit reporting system is an awkward fit for buy now, pay later. It's not. It is not, traditionally what fits into the credit reporting system, and so this needs to be done thoughtfully to ensure that consumers are protected.